Hello and welcome to ZuluTrade. In this video, we will show you the basics of managing a Forex account, including how to place a trade, how to set up a stop loss, which helps you protect your margin, and finally, how to place a limit order to secure your potential earnings. So, you've decided to invest in Forex, you chose a broker and opened an account with them, possibly through ZuluTrade. But how do you actually open up a position? To see this in action, we are going to use the ZuluTrade platform, which can be accessed by selecting the Trade tab at the My Account page. On this table, there are three columns: Currency, Sell, and Buy. The Currency column lists all the current pairs supported by the system. From here, you can select the pair that you are interested in trading. A couple of terms before we move on. When dealing with currency pairs in Forex trade, the first currency is often referred to as the base currency, and the second currency is often referred to as the quote currency. After you have selected a currency pair, you will determine if you want to sell or buy the base currency using the quote currency. You buy a pair if you believe that the base currency will appreciate or go up relative to the quote currency, and you sell a pair if you think the base currency will depreciate or go down relative to the quote currency. Now, as you will notice by looking at the buy and sell columns of the chart, currencies typically have two prices. Under the sell column, we find what is called the bid price. This is the amount at which the market will buy 1 unit of the base currency using the quote currency. Under the buy column, we find what is called the ask price. This is the amount at which the market will sell 1 unit of the base currency using the quote currency. The bid price is always smaller than the ask price, and the difference between the bid and the ask price is popularly known as the spread. To better understand this, let's look at an example of a trade. For the pound US dollar pair, the bid price is 1.63414, and the ask price is 1.63455. If you want to sell pounds, you click the price on the sell column and you will sell pounds at 1.63414. If you want to buy pounds, you click the price on the buy and you will buy pounds at 1.63455. Although this is enough to place a trade, there are still some more advanced options that you can use to adjust and manage your position. Let's take a look at them. A market order buys or sells the currency pair immediately at the current rate determined by the market, and it therefore cannot be changed. As you can see, the market box has already been checked. This is because all transactions are by default market orders. By deselecting the box, you can place what is called a limit order. A limit order is an order placed to buy or sell a certain predetermined price. The limit order is typically based on two variables, price and duration. Let's take a look at an example. Let's say that the Euro-US dollar pair is currently being sold for 1.2050 euros to the dollar. But you only want to buy euros if the price reaches 1.2070. You can either sit in front of your monitor and wait for it to hit 1.2070, at which point you would execute a market order, or you can set a buy limit order at 1.2070. If the price goes up to 1.2070, the platform will automatically execute a buy order at that exact price. In this field, traders can determine the size of the order in lots. By default, all orders are set at 1 lot. A stop-loss order tells the system to close a position when it reaches a certain price. A stop-loss order is designed to limit a trader's potential loss. For example, setting a stop-loss order for 10% below the price you paid for the trade will limit your loss to 10%. A stop-loss order remains in effect until your position is liquidated or until you cancel the stop-loss order. For example, you bought the Euro-US dollar pair at 1.2230. To limit your maximum loss, you set up a stop-loss order at 1.2200. This means that if you were wrong and the Euro-US dollar drops to 1.2200, instead of moving up, the platform would automatically execute a sell order at 1.2200 and close your position for a 30 pip loss. On ZuluTrade, all positions have a default stop loss at 500 pips. You can customize this value at the specified field. The opposite of a stop loss action can also be executed. That is, you can set a stop limit to close your position after it has reached your desired profit level. While closing a position while it is going up may sound counterintuitive, the very essence of Forex trading is not only to make pips, but to keep them. So terminating a trade after it has reached a desired level may protect you from losing your gains in case the market takes a sharp turn. Let's assume that, as in the previous example, you bought a Euro-US dollar pair at 1.2230. If you think that a reasonable gain from this trade is 40 pips, you can set a limit at 1.2270. This means that if you were right and the Euro-US dollar pair rose to 1.2270, the platform would automatically execute the order at 1.2270 and secure your 40 pip gain, even if later the position falls lower than this level. On ZuluTrade, all positions have, by default, a stop limit at 500 pips. Like the stop loss, you can also customize the stop limit at the specified field. We hope this video will assist you in managing your Forex trading account successfully. If you are interested in the opportunities of Forex trading but still feel a little uncomfortable executing your own trades, don't despair. You can always use the ZuluTrade platform to select experts that can make the difficult decisions for you, for free. For more information on how the ZuluTrade service works, you can find us at www.zulutrade.com.